Welcome to The Explainer. Today, we're tackling the unconventional and, let's be honest, provocative financial thesis of Michael Saylor. This is a strategy that basically wants to tear up the corporate finance playbook and start all over again. Okay, let's just dive right in with this quote, which is, wow, it's pretty staggering, right? He's not just suggesting Bitcoin is a good investment. No, he's flipping it completely and saying that the decision not to buy it is what's actually costing you an astronomical amount of money. So you have to ask, how on earth can he justify a number like that? It sounds pretty extreme. But the logic, at least according to Saylor, isn't really about a wild price prediction for Bitcoin. It all starts with the fundamental problems he sees in our current financial system.
To really get where he's coming from, first we have to look at the problem he believes is just hiding there in plain sight. He argues that for thousands of public companies out there, the conventional playbook isn't just outdated, it's actually a losing strategy.
He paints this picture of a two-tiered market. On one side, you've got the haves, the 100 or so huge companies that dominate all the trading volume and get all the attention. And then there's everybody else, the have-nots, 12,000 other companies left fighting for scraps, feeling totally invisible in a world of these trillion-dollar digital giants. And you can really feel the hopelessness he's talking about in this quote. I mean, these mid-sized companies are out there struggling, feeling like they're just destined to become roadkill for the Amazons of the world. So what are they supposed to do? Saylor argues the conventional playbook is a trap. Companies work hard, they generate cash, but then they're told that holding that cash is a liability, it's trash, so they give it back to shareholders. The result? They slowly bleed themselves dry. They become decapitalized, as he puts it, and incredibly vulnerable to the next big economic shock. Okay, so if the old playbook is totally broken, what's the alternative? This is where Saylor proposes a really radical shift. It starts with how a company thinks about its most fundamental asset, its treasury. For the last 100 years or so, the standard, safe choice for a treasury asset has been government debt. But Saylor's point is that this standard isn't permanent. It's just the latest step in a much longer evolution of money. And this historical view is absolutely key to his whole argument. It reframes Bitcoin. It's not some crazy speculative thing that came out of nowhere. In his view, it's just the next logical step in the evolution of a reserve asset, from physical gold to government-backed paper to now a global digital asset. So his core idea is pretty simple when you boil it down. Companies can find new life, new energy, by digitally transforming their balance sheet. Instead of holding a passive asset like cash that's losing value every year, they convert it into what he sees as a high-performance digital engine. Okay, but here's the big question, right? How does a strategy built on such a volatile asset actually hold up when the world gets chaotic? Well, according to Saylor, that's precisely when it shines the brightest. I mean, in today's world, traditional businesses are pretty fragile. They're exposed to everything: trade wars, supply chains snapping, geopolitical messes. Any one of these things can disrupt your revenue or even zero it out overnight. And here's the contrast he draws. A normal business is vulnerable to all these real-world problems, but Bitcoin, as a digital commodity, he says it's immune. It doesn't have a supply chain. It doesn't care about tariffs. It has no factory to shut down or employees to manage. So, here's the crucial point. Every time there's a big macroeconomic panic, far from weakening the case for Bitcoin, it actually works like a giant advertisement. It highlights Bitcoin's unique properties to a whole new group of people who are suddenly realizing their traditional assets are way more fragile than they thought. But Saylor's whole thesis isn't just for corporations. He has an equally unconventional and maybe even more provocative playbook for individuals who are looking for financial growth. And this is where his advice gets really wild. To get what he calls 100x returns, he argues you have to take everything you've ever learned about debt and wealth and just flip it completely on its head. He uses this powerful example about a Ferrari to explain opportunity cost. Buying a Ferrari today for, let's say, 6 Bitcoin isn't just buying a car. In his view, you're giving away an asset that could be worth nearly $100 million in 20 years. So what shouldn't you do? Well, he outlines this don't list. The first 2 points make sense, right? Live responsibly. But that last one, don't pay off your mortgage, that is so counterintuitive for most of us who see being debt-free as the ultimate goal. Here's the strategy. He says to look at your mortgage not as a burden, but as a tool. It's the cheapest, most stable form of capital an individual can probably ever access. So the idea is to use that cheap capital to acquire what he believes is the world's highest performing asset.
So what's the end game in all of this? Why is he so convinced? It really all comes down to his belief that we are in the very quiet, very early days of an exponential change that most people just can't see yet. He uses that classic lily pad analogy to explain why exponential growth is so hard for our brains to really get. You know, if lily pads double every day and cover a pond in 30 days, when is the pond half full? The answer, of course, is on day 29. And that's the whole deceptive nature of it. For weeks, it looks like almost nothing is happening. Then, in just the last few days, it becomes explosive and it takes over everything. Saylor's bet is that with Bitcoin, we are still in those early, quiet days. Ultimately, he believes Bitcoin's adoption isn't being driven by some complex ideology or a desire for anarchy. No, it's driven by the most basic, universal human financial desire there is, just wanting to preserve your wealth. Smart people all over the world simply want to keep their money, and they are slowly realizing this might be a very powerful way to do that.
You know, Saylor presents a powerful and really consistent case. But the question that leaves us with is this: are we witnessing the blueprint for a whole new financial world? Or is this just a grand, high-stakes gamble built on an asset that's famous for its volatility? I guess only time will tell.